Okay, welcome folks, welcome traders, welcome to the ACY webinar this evening called Quick Start. So this evening we will be presenting the Quick Start strategy to you. We'll also have a full-time trader, our own senior market strategist, Duncan Cooper, joining us this evening as well. So hello Duncan, are you tuning in all right?
Yeah, hi, nice, I can see you. Yeah.
Awesome. Sounds
Hello,
good.
everybody.
Now, things you need to know about Duncan. He's been trading the market for well over 15 years. Before that, Duncan was actually a professional golf tutor over in lovely England, where Australia is currently beating them at the Ashes, and became a full-time trader. Now, Duncan was also one of my first trading mentors many moons ago. So we will be getting some education today from Duncan, as well as taking you through this quick start strategy. So let's get into it. We do have, okay, we've got a bunch of people joining us now. So I will share my screen so you don't have to look at my face here, but we are coming to you live from the ACY Securities headquarters here in Sydney, Australia. So let's have a look to start off with. All right, so I'll be sharing my screen with you now. Okay, so we will just go with what you're seeing at the moment. So tonight's quick start trading strategy, as mentioned, we won't be giving any personal advice this evening, folks. So please have a quick read of that risk disclaimer that you can see in front of your eyes. We will be providing lots of information about trading, about markets. We will be providing some education, but we won't be providing any personal trading advice. So we won't be telling you, hey, to buy this or sell that. It will be providing lots of helpful information and education. So look forward to presenting Quick Start to you. Now, a bit of a summary before we get started. So looking at Quick Start tonight. So we're going to start off with Duncan giving us a bit of an insight into why people are trading with a trend. Now, why is trading with a trend important? That will be followed up by allowing us a educational walkthrough of how do you identify a trend, what kind of trends are they, and maybe what type of trends are seen as important to a full-time trader like Duncan. The other thing we'll move into from there is showing you and giving you a demonstration and explanation of this quick start strategy. And remember, that's what tonight's all about. We put together an ability, an easy way for people to follow a trading strategy that they can look for trade setups on a daily basis and follow in line with trading with a trend. So it'll include identifying your setup and the ability to place a stop loss and, of course, exit that strategy as well. So we'll go into that in some detail. We'll also go through some of the key principles in managing your trade, because once you've identified a strategy that's easy to follow to enter the trade, we then need to ask ourselves the question, what do we do once we're in the trade? And then how do I manage the trade and choose an exit point? And again, we'll draw on Duncan's expertise to give us some insights into some of the key things to use that are very simple. Okay, so tonight's webinar here and presentation on Quick Start, yes, it's for beginner traders, that a simple way to follow a trading strategy. But at the same time, it's for traders who may have done some trading before, but haven't been very regimented in having a strategy they follow and seeing some of the benefits, I guess, of having a strategy. It almost allows you to have a bit of a refresh with your trading and then get back into that rhythm or that groove. So with no further ado, let's get started. So to do that, I will be welcoming onto the webinar tonight Duncan Cooper. Feel free, Duncan, to take control and give us some insights into why trend trading what it is and how important it is.
Sure, I'll just reclaim the screen.
While Duncan's doing that, I want you all to remember Duncan is very happy at the moment because he's a Taylor Swift fan and he just got tickets to Taylor Swift's upcoming concert. Very happy man, aren't you, Duncan?
I am indeed. Yeah, I'm going to be down in Sydney. I'm on the Gold Coast, but I'll be down in Sydney next February to certainly see the concert. And
awesome.
My daughter's looking very much forward to it.
Fantastic.
All right, so welcome everybody. As Nathan was saying, my name's Duncan Cooper. I'm the Senior Market Strategist here at ACY Securities. And I'm going to take you through a little bit of a tour of what a trend is. Now, this presentation I've got here is a shortened version of one of the webinars that I do here at ACY Securities, one of 30 that I do. So tonight's topic is market trend. And for those just coming in, we've got the disclaimer. So if you haven't read it, let's just read through it. And Nathan, if there's any questions coming out while I'm going through, you can just shout them out and I'll
sounds good.
Take them from you. So I'll just give everybody 30 seconds to read through. And while I'm reading through, as Nathan said, I've been trading now for more than 15 years in the Forex market. Trading full time now. Been mentoring clients for more than 10 years. I had the opportunity of mentoring Nathan many years ago. And he's living proof that if you've got a good technical approach and you're disciplined, you should be able to maybe conquer the trading world and be a profitable trader. So let's get into what the trend is. I'm going to cover these topics. Now, my presentation is only going to be maybe 10 to 15 minutes max, and then Nathan's going to take over. So we're going to start with what is an uptrend. So I'm just going to talk about the day chart in terms of trend, but really trend, you're going to be looking at the higher time frame charts for trend, but we're going to read, focus on the day chart as our main guide for trend. So trend, it's either an uptrend or a downtrend. Here we're going to go through what an uptrend is. And an uptrend is when we start to see a series of higher highs coming in on the chart and higher lows coming in the chart. Often a new uptrend will form once we've hit a level of support. Not always. Sometimes a new trend can start without hitting support, but often we'll hit support, and then from support we get a series of higher highs and higher lows forming. So an uptrend will start to form. Maybe we come down to support, and at the moment we have a downtrend because we have a lower high here and a lower low, and then price starts to move up day by day. Now, an uptrend starts to form when we trade above the last lower high. That's the first significant factor of a change in trend. And then we will get some form of a pullback. Could be a 1-day pullback, 2 or 3-day pullback, but we get a pullback. And a higher high forms on the chart. And then really the confirmation of the trend forming is when we get the first higher low forming. And then continuation for trend is when we get another higher high coming in and a further higher low. And we could maybe have 5 higher highs, 5 higher lows. It all depends how strong the trend is. So in a nutshell, that's what a trend is looking like on a daily chart in an uptrend. All right. Now looking at a chart. Now, if you get my chart layouts and templates, Nathan will talk to you about those. What I have on my higher time frame charts is the support and resistance indicator, and it signifies the most important highs and lows that I use as reference points for determining whether I've got a higher high, higher low, so on and so forth. Okay.
And they're just all the dots, aren't they?
Those are all the dots. So if I come over to this high here, there's a high here with dots. At that point in time, price was moving up, and that was a higher high. And we're moving up from a higher low here. So I'm using these dots to signify the importance of those highs and lows.
Sure.
All right, so let's have a look at an example. So here we have a blank chart. What I'm going to do is draw in and show you where the trend is. So I'm just marking in where the downtrend was. Here we have a lower high, lower low, and then we actually start to move up to higher high, higher low, higher high, higher low, and so on. as this uptrend unfolds. Now, when I'm trading, I don't actually draw in these markers, but it's just, for clear reference of what we're seeing on the chart tonight. And the uptrend starts when price action breaks above the last lower high here. So on this chart here, when that candle trades up above the top of that red candle there, that's when the new uptrend starts to form on the day chart. And you can see that it obviously continues for many, many trading days, probably a good month's worth of trading there. And just to show you the swings, so you can clearly see we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. And the actual change of trend occurs back to the downside when we break below, get my mouse back on here, when we break below this higher low here. All right, so that's why it's so important to follow the trend, because the trend can continue for months if it really wants to. And we look to trade in the direction of the trend. All right,
and
so
what's the significance too, Duncan? Like, what do you, in your perception, other than the fact that the trend is your friend and it can continue and provide you trading opportunities, how else do you sort of perceive trend as being important with your trading?
Well, the larger moves always happen with the trend. Like this, once we broke above this high, you look at the length of that move. Sure. And then the pullbacks are relative to, the next pullback is really short to that long move up. So trading counter trends, the movements against the trend can always be very, very short.
Sure.
And the movements up with the trend in an uptrend can be very long. So we're always going to maximize the potential profit trading with the trend rather than trying to go counter trend.
Sure. Got you.
All right. So that's the benefit of trading with the trend. All right. So that's an example of an uptrend there. On the flip side, we have a downtrend. And the downtrend is when we have a series of lower lows and a series of lower highs. And a new downtrend will often form when price moves back to a previous level of resistance. Not always, but quite often. And once you've been spending a lot of time on charts, especially a daily chart, you'll start to see that, yes, uptrends finish at resistance and downtrends finish at support, generally speaking. All right, so let's just walk through how a downtrend will start to form. So yes, you'll have an uptrend where you have a higher low, higher high. You may have met a key level of resistance. Price starts to turn around. We have 1 day down at the moment, but if we trade down and break below the last higher low, that signifies a change in trend. Then you'll get the rally. It might be a 1 day rally, 2 day rally, or a 3 day rally, but you'll get a rally and then a lower high will form. And we'll move down to the next lower low, rally back up, another lower high will form, and so on. So you start to get these series of a lower low. We move up to a lower high, we move back down, we move back up to a lower high, and so on. So price is, in a downtrend, price is never moving down all the time. You get these days where we're moving up. So we're waiting for those upward movements to finish. And when we're trading with the downtrend, we're looking to trade in this movement here as we're starting to move back down with the longer term trend. So looking at that on the chart, day chart example here of a downtrend coming up. I've marked in here.
And the New Zealand dollar has been very good on the downtrend, hasn't it?
Well, it has.
Of late, even though they're raising rates, like more than anyone around the globe. That's consecutively.
Right. Over the last 2 years, it's been having quite a nice decline. All right, so we have a higher low here, moving up to a higher high, but then things change and price action moves down to a lower low. That's the first signal of a change in trend. The downtrend starts when we break below the last higher low. Then, of course, we get a 2 to 3 day rally here, and then we move down to form a lower high, and then we get a series of lower low, a lower high, a lower low, lower high, lower low, lower high, lower low, and so on. And put in the swings so you can clearly see that moving down in a kind of stair effect, lower low, lower high, lower low, lower high. And of course, your question before, why trade with the trend? You can see these rallies here, they're very short-lived, aren't they? But the movements down with the trend movements down are about 1, 2, 3, 4, 5, 6 days down, 2 days up, again, about 6 days down, 2 or 3 days up here. So there's always more time with the trend, more time potentially to collect profit, trading with the trend rather than trying to trade against it, trying to go counter trend. You can see long term here over probably, I'm guessing here, but maybe 4 to 6 months, we trade down from around about, the 7,600 level down to this, the 62 level. My math is right. That's about 1,400 pips, if people know what pips are. So, that's the benefit of trading with the trend, that usually the bigger moves are always with the trends.
And at $10 a pip or $1 a pip, whatever
That's
trade
right.
size you're doing, it's providing you a long-term move. So,
yeah,
I mean, no one rings a bell at the top of a trend or at the bottom of a trend. So taking advantage of it during the trend is becoming more beneficial for the fact that it's moving further in line with the trend than it is counter trend.
That's right. I mean, looking at this isn't a chart of last year's market, but last year's market, for the most part, most currency pairs, say to the US dollar, for example, like the pound to the US dollar, the euro to the US dollar, the New Zealand dollar to the US dollar, the Aussie to the US dollar, they moved down pretty much all year, didn't they? There were those counter trend moves, but the dominant trend was to the downside. So, just to wrap up what I'm talking about, now, if you wanted to look at trading and trading intraday, you really need to get your head around what the day chart trend is and understand what the trend is. So to be successful at trading, we need to trade in line with the higher time frame trend. And for day trading, I would suggest we use the day chart to determine the trend and our trading bias. And, looking for trade setups, you're going to go through a strategy, so it'll give an indication of how to look. The strategy you're going to take us through is looking at the day chart for the higher time frame trend and looking at a lower time frame chart, the 1 hour chart. So, looking for trade setups, identifying them and executing them on a lower time frame chart in line with the day chart trends. That's what we're going to, put across tonight in a very simple strategy. So, if the day chart trend is up, really we want to be looking to be a buyer on a setup. And if the day chart trend is down, we want to look to sell on a setup.
Perfect.
So, if you're new to trading or been trading for a while and you're not consistently profitable, as a very strong suggestion, I'd urge you to only trade in line with the day chart trend. And as you know, both you and I have, had the opportunity to mentor many clients over the time. And probably the biggest mistake people do is they're just trading against the dominant trend, which is, the higher time frame charts like the day chart or the weekly chart. They spend a lot of time on maybe a 5-minute chart. They've got no idea where the day chart trend is. And often they're just going counter to that trend. So, as I was saying, so many traders focus on trading the trend off the lower time frame charts without considering the higher time frame trends and lose money. So you're going to go through the quick start strategy, and that's going to hopefully, cover those bases of trading in line with the dominant trend and executing off a lower time frame chart. So that's my presentation. But what I thought, for me, just to wrap up, and if you've got some questions you want to throw at me, we'll just drop into my charts. And this is my day chart of the euro dollar. So if anybody knows anything about currency trading, they should know what the euro dollar is. But the euro and the US dollar, those are the main major currencies in the world. So we have the euro versus the US dollar here. And I'm just drawing in the swings on the day chart just to show you what's been happening over the last, let's see, from March forward. We kind of started to top out here in March. And, the downtrend started.
It was a good triple top.
Good triple top, yeah. Maybe getting to the end of April here, we started to create that triple top. And really, we had a trend change to the downside through the month of May. when we broke below this
Sure.
higher low there. So, and then you can see, the benefit of trading in the downward direction because there was a long-term move down. And then as we got into the new month of June, we actually changed trend back to the upside. So we traded
back above high.
About, we moved above this lower high here. Once we moved above that level, we've been trading up for maybe 2 weeks. And now we've just had maybe a change of trend now back to the downside when we broke below that low there. The rules for a trend, I get my line to draw straight. We do now have lower low, lower high, and we're trying to move down towards a further lower low. So on the euro dollar there, we can see there over the few months, we've moved into a downtrend, we moved back into an uptrend, and now we're moving back down potentially into a downtrend once more.
And you'll notice when it did break that, broke the swung down and put in a lower low, it moved down very rapidly. In fact, to the point where it was almost quite surprising. We saw price move a good few hundred pips. So getting that change of direction and then trading with the trend became, very profitable to the point where a lot of fundamental views, were a bit shocked, about that too. So that's something to keep in mind with, we're making sure we're going in line with what the market's telling us rather than what we think is driving the market.
Exactly, yeah.
All right.
So that's a very quick run through what the day chart trend looks like. And of course, you're going to take us through the quick start strategy.
Will do.
Is looking to trade in that direction, but from a lower time frame chart. So I'll hand that over to you, and I'll maybe just sit here on the sidelines, and I might fire a few questions at you if something comes to mind.
And tell me if I'm getting anything wrong, Duncan. If I'm not explaining this well, then please feel free to fire those questions through. Thank you, Duncan. And of course, Duncan will bring you back in once we've gone through the quick start strategy and explained it and demonstrated it. And then, of course, what do we do once we're in a trade? So, because that effectively, folks, is the method and the madness of trading, is saying, right, what are my reasons, and do I have multiple reasons for entering a trade? And then what is my trigger? Like, what's going to happen in the market that's going to say to me, right, this is now confirming the direction that I'm looking to trade. So once you've entered and you've got your risk established, okay, then the next part of the trade, for my mind, is about exiting, managing. Do I take partial profits? What will be, what will be my target, etc. So they're the sort of three bits: what's your trigger to entry, what's your trade setup, and then what's my reason to enter and how am I going to manage it. So quick start, folks, I want to show you now. So I'll share my screen with you. And quick start is something that is available at ACY Securities for all of our live registered clients. So it's free to register. There's no obligation to trade. Keep in mind, if you're using a new strategy, perhaps get used to it on our demo accounts. You can use our demo accounts while you're learning the strategy and while you're getting comfortable with it as well. So let's start off with quick start and I'll show it to you. So I'm just sharing my screen with you now. So Duncan was going through in some detail about trend. So what we've done on quick start is we just use a 1 hour chart. So you'll see it's very colorful, and I'll just take you through what these colors mean and how we can use it. So it's a colorful chart. We're just on 1 hour. So we keep it on a 1 hour chart, and that allows us to determine multiple things. So we don't have to skip around for time frames. We just stay on this 1 hour chart. So let me take you through what it means. So I'll start off perhaps looking at the dollar CAD. And what we're looking for is we're looking at charts that when we look right down the bottom of the charts, I want you to look down the bottom here. This is that daily trend that Duncan was talking about. So when we look down the bottom where I'm sort of highlighting, that's your daily trend. I don't need to go to the daily chart and check out for higher tops and bottoms, etc. What is the current trend? If it's red, that means the daily trend is down. What we're looking to do is then match that, okay, with a shorter time frame. In this case, the hourly trend. So we want to keep in mind the longer term trend, and then we want to match that with the hourly trend. It's very easy to do. So down the bottom is red, and the hourly trend right now is green, not a match. So on the Aussie yen, I'll literally throw that out for the day at the moment and say it's not a match, so I'm not looking to enter a trade there. So if I move across, and the beauty is, you can say, I'm going to quickly, in a couple of minutes, isolate the trades that I want to keep an eye on, get rid of the ones in this strategy that don't match. So if I was to go Aussie US dollar, not a match, folks. So the hourly and the daily are in disagreement at this stage. So I'll ignore it. I could then go to say pound yen, and you can see pound yen at the moment, it's still not a match. So that isn't one I want to focus my attention on. Okay, so it's a very simple concept. Or you can see pound dollar now is no longer a match. Okay, so it does, in a way, stop you avoiding feeling like I just want to be in a trade. I need to go through, and I can do it like I'm doing with you now quite quickly. And until I find something that's a match, then I will look for my trigger signal to enter. Okay, so I'm trading with the daily trend and making sure the hourly trend is following it. So we'll keep going through for these purposes, because in the last hour, we've had some movement in the market and some changes of direction. Here you go. So right now we've got the New Zealand yen. So the New Zealand yen we've got is green, okay, down the bottom here. The daily trend is up. Now the hourly trend is also up, okay? So that's a match. So with a trade like that, I could look to enter a trade. So a trade here is actually just set up a couple of hours ago. So now that it's a match, we look to trade in line with the match. In this case, it's green, green. So now we're looking to be a buyer. So what we've done to enter the trade, and I'll just move, what we've got up on the chart now is these dots, okay? So the dots, it's very simple. What we want to see to enter is price breaking out in line with the daily trend and the hourly trend matching. So that's what we want to see. Now, in order to trigger in and see that breakout, we've made it really simple. So we want to see price, in this case, go up and touch that green dot. So that's simple. Green, green, and green. So as you keep moving higher, and just use this as an example, you'll see price has literally just hit this green dot and it's replaced it with a red dot, okay? And now we can see that it's actually turned green. So this has all happened pretty recently. So why do we have the red dot? Well, sometimes people might use the red dot as a spot to put their stop loss, okay? So it's very simple. If it triggers, which this trade has, it's replaced it with a red dot. So you can enter here on the trigger. It's green, green, and then you might choose, and I'll just use a line. I'll put a stop just below. I tend to put it just below the first dot. So I'll put a couple of pips there, okay? And that way you can sort of determine what your risk is. Therefore, what sort of trade size am I going to do? So I'm choosing a trade that the daily trend is up, the hourly trend is in agreement, and I've just had a breakout. So it's green, green, and green. Okay, so let's go and have a look at a trade that we looked at over the last 24 hours. So I'm going to go have a look now at the dollar CAD. So again, I'm just going to take it back so we get just a refresh of what that means. So I look down the bottom here and it's green, green, daily trend is up, hourly trend is up. All I want to see is price breaking out. So price will break out if it hits the green dot. So as I move this chart across a bit more, boom, there it is there. So a few hours ago, or it could have been yesterday, because remember each chart's an hour, that was your entry point. So price went up, replaced the green dot with a red dot down there. So if I was using the strategy of the previous low, I'd put a stop just below that red dot, and this is where I'd enter. So as we fast forward, right now we can see price has continued higher and we're getting a bit of a pullback at the moment. But in saying that, we've got plenty of room down to where our stop is. So this idea, folks, is a really simple way for you to go through the charts each day, isolate the trends, green, that match, and then you can check back in later in the day or perhaps around the time of a market open, and you can look at it and look for that breakout to occur. So it's not something that you're going to be watching all the time. It's something that you can come back in a few hours and see if it's triggered, okay? And if it has triggered, make a decision then yourself whether you want to enter. So it's a fantastic strategy as far as getting you in a basic scenario to follow a strategy, a trend following strategy, that you're following a bunch of rules and you're looking to enter on a breakout. So very simple indeed. Now what I'll do is show you an example over the last 24 hours where a sell trade has set up, and just quickly explain that. Very similar to the buy. So let's go back. This is the Aussie yen. So you can see down the bottom here yesterday, we had the hourly matching. Okay, right now it's just changed. So it's not a setup at the moment or one we'd focus on at this stage. But if I take you back to yesterday, if we're looking for a sell, I'm looking at this right now yesterday and saying, okay, my daily trend is red, it's down. My hourly trend is red, it's down, it's matching. So now I want to see price actually break to the downside. How do I determine that? Well, all I need to do is have price touch a red dot, red dot. So very simple, it's all matching. So if I just move this chart forward, boom, there it is. So you'll see you could, if you chose to, enter a sell trade on this setup as price hits that red dot. You don't have to wait for the candle to close. It's literally very simplified. So a green dot has formed. So I could say to myself, I'll enter this trade where you got in. Keep in mind, you might have got in a few pips beyond that. And that is a decision that traders have to make and stick to with their strategy. And then I might choose with the green dot above to put in my stop. Okay, so there's my stop. As we move forward from yesterday, price is now moving down from that entry, selling off quite heavily. So at one point it was down nearly 98 pips. And if our risk at that time was only about 27, 28 pips. So you were in a position there where even just on the hours yesterday, there was sort of a potential 3-to-1 type risk reward trade there also. So in a nutshell, okay, that is quick start. So it is a strategy that is taught by your account managers here at ACY. I can see we've got clients joining us that do have live accounts at ACY. And if you don't have a live account, let me just put into the chat here, I'll put an actual link so you can register for your live account. And once that account is registered, it's free to do so, and there's no obligation to trade. We do accept a minimum of $50 or in your currency account as a minimum deposit. And of course, your account manager, once you're verified, will help you set it up on your MetaTrader 4 platform. Okay, so they can set that up for you. And not only that, they can provide you some education in using it. What we'll also do is maybe a week later or after you've started using it, we'll do a trade review, and that can be really handy. So having a second pair of eyes to have a look at the trades that you have entered using Quick Start and review, okay, so how did they perform? Because the reality is, this is like, to me, an educational tool to get you started trading and following a strategy with good, sound reasons. So keep in mind, this isn't some magical money-making machine. This is more like I think of it as a soft, big surfboard that people learn to surf on. So it's simple. It allows you to stand up and then sort of start to learn more from there. So the advantage you've got with ACY Securities, and of course Duncan Cooper, is we go from here and then start to layer the education on top of that. In fact, there's a recorded 30-part trading course. So you can watch all the recordings and learn everything from technical analysis, indicators, entry criteria, longer term trades, shorter term trades, all sorts of things about trading, from the very beginner stuff right through to the very advanced. You can also join Duncan Cooper at the live webinars as well. So you can ask him questions live as he's doing analysis and teaching the course live too. So you get access, I guess, to all of those things by just opening your live account. And then from there, what we've created is a live interactive trading feed. So based on the education that you'll receive, we then alert people live when key levels are being reached in the market, because as you can imagine, the markets are moving 24 hours a day. So sometimes you'll be busy, and if you just get a live alert telling you that a key level with the description of what the key level is, then you could maybe go and have a look and make your own decision to see if it matches your criteria. So knowing when the key levels are happening is one thing. Understanding why it's a key level is also important. But the other thing is having your platform set up so that you have what's in front of your screen to suit the type of trading that you're looking to do. So let me show you up here. So I'll go File, Profiles. So all of our clients can have access. You'll see here I've got this 12 pairs. So that's 12 currency pairs set up for you to look at easily each day with Quick Start. But then we have all these other different trading setups. So your platform can look exactly like mine, okay? And that way, when you're meeting to talk about your trading, we can use Zoom and we can see what you're doing and you can see what we're doing. So it becomes a very handy environment. So for example, let me show you one of the strategies here. You've got 1 hour momentum trading strategy that's taught. You've also got an intraday. So rather than using an hourly chart, you go down for looking for more intraday called the pivot system. Okay, so let me show you the 12 pairs daylight saving. And this is when you're starting to get a little bit more advanced and looking for shorter term intraday strategy. So what you'll see on your page here is all these pivot lines, okay, allowing you to have intraday support and resistance levels. It also shows you, okay, when market sessions are opening, when you know volume is starting to hit a market. So you'll see here, we'll see Frankfurt and London just opened a few hours ago. It's good to have that pop up so you know that there could be a lot more volume about to enter the market, okay? So you'll go from, say, you know, Tokyo open, Frankfurt, London, and then New York. And you'll see, say, just on this chart as well, this Aussie yen, just as the Frankfurt and London markets open, we started to get a move. The Asian session from Tokyo was a bit sideways, but negative. And then boom, we had this really strong move. So these are the types of things that I guess are taught. And then the real part of it is you can go through and learn all of those in your own time, or your account manager will set it up for you and can also explain the meaning of it as well and answer your questions. So that there is your pivot system. But let's go back now and have a look at the Quick Start. Okay, so here we are on Quick Start at the moment. Feel free at this stage, if there's questions about Quick Start, to send them through because we'll be happy to answer those questions for you. But what I want to look at too is anything that might be setting up right now. So I'm looking at this euro pound, okay? And what we're waiting on right now, we can see it's the daily trend is up, the hourly trend is matching. but we want to see price go up and actually hit that green dot. And you'll see how close it came an hour ago, right? Before it completely sold off. So this is an example of where, you know, following a strategy and waiting for price to actually break out was extremely imperative, because at this stage, it didn't hit the green dot and it's already gone down in the last 2 hours over 27 pips. So even though you're trading with the trend, it's really handy to make sure that you're following your strategy. Is there something you want to jump in there, Duncan?
Yeah, there's a couple of good examples right now on the New Zealand crosses. So if you went to the New Zealand yen or the New Zealand dollar, I'm just having a look at those while you've been talking. They're just starting to head up, but you know, the rules that you've been discussing, if you have a look at the New Zealand yen, we've got the day chart trend, which is up, and the 1 hour trend is up. And you know, price is pretty much in the zone where you would be looking for your entry at the moment.
Okay.
And then of course you put your stop loss down at the first red dot. You may have covered that one a little bit earlier, but
yes, where that black line is. So that's right.
You know,
that's now
really
a live trade.
That's really in the, you know, the comfort zone there where you want to be buying.
Sure.
And then if you go to the New Zealand dollar, that's looking very similar. Day chart trend is up. The 1 hour trend's been up for the last 4 or 5 hours, but we're just a little bit beyond the entry point now. But it's a very good example of an entry where you're waiting for the 1 hour chart trend there to match the daily, and then you're looking for the trigger, which is price crossing the green dot. So around about the 61.94 level maybe was the entry, and you know, it's up.
Perfect.
It's up 14 pips at the moment. You know, 14 pips, if people don't know what a pip is, look at that as a point. And if you're trading at a risk of say $10 a point, that's, you know, at the moment that's moving up at a gain of $140. You know, if you're trading at $1 a point, you're up $14 at the moment. And while we're talking, it's just starting to spike up.
Yeah, it's magical. Did you organize that?
I wish.
It must be. Fantastic. Yeah. So folks, this is sort of live action, how you can start to, I guess, isolate your opportunities with the most going for it based on your strategy, and look for your triggers to entry and manage your risk. So before we move on, I guess, with the quick start, Duncan, can I get you to come in and so we've seen a few trades here, trigger and setup. It was all pretty simple, either red, 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 or green, green, green. So once we're in this trade, let's assume we're in this trade at the moment. Tell me what would be sort of the best tip, trading tip that you could give people, or one of the key principles that you think people might need to know now that they're in a trade.
Well, I think what we need to talk about is before you get into the trade. So I'll just share my screen. I'll just grab back
the
hosting rights. Be there in a moment. All right, so hopefully you got my screen there. So I've just put a bit of information on the chart here. So here was a trade setup that was setting up yesterday, I think, or maybe, yeah, it was in the 4th of July. Some point, so maybe a couple of days ago, and price action here was crossing the green dot here. But if we go through the trend analysis, the day chart trend down here is green, and I'll just get my crosshairs on here so we can see cross reference here. We start to get green on the 1 hour chart in through here, so we actually cross the green dot just here. So that's where you start to think about, okay, is it time for me to, you know, engage in the market and take a trade, do a buy? But the thing to think about is when you're entering a trade is we want to think about how much of a reward we're trying to achieve. Now, the risk on the trade here is from the entry point to the first red dot, and I'm measuring there, it's approximately 20 pips. So what I've done here is I've set myself up a target where if I'm risking 20 pips, I'm targeting twice as much. So we call that a risk to reward. So risking 1 to target 2.
So you might be risking $100, but to make $200.
Correct. So
Right.
giving my chance the opportunity that, if I had a win to loss ratio, so I'm having winning trades, I'm having losing trades. If my win to loss ratio is 50-50, as you were saying about $100, that if I lose, I'm going to lose $100. But what I want to try and set up is that if I have a winning trade, I'm going to make 200. So that when I have a losing trade, I've made that losing, and I've made the money for that losing trade on my win. So over the long course there, if I have a win, I make 200. And then if I have a loss,
Sure.
okay, I lose 100, but I'm still up 100. And then if I have another win of $200, now I'm up $300. If I have another loss, I'm still up $200. So I'm trying to keep myself ahead of the game all the time by having a good risk to reward. So I think the first thing to consider as you're taking the trade is try to create that risk reward of 1 to 2. So if I'm risking $100 on the trade, if my trade works out, potentially I can make 200 as a minimum risk reward.
And Duncan, do you find, with your trading that, one really big return can pay for a lot of your losses?
Well, it can, yes. I mean, even though we're discussing here using a risk reward of 1 to 2, I can see over here, if I this previous trade, well, I mean, let's talk about this trade here of a couple of days ago.
Yeah.
Whilst I've set it up here of a risk reward of 1 to 2, it probably goes up to more of a risk reward of 1 to 3. So I was saying, if you were risking $100 on the trade, it actually moved up potentially there $300 in your favor in this example. So trying to maximize your targets, at least targeting a 1 to 2 is a good starting point as a new trader. If you're just targeting 1 to 1 all the time, so if I'm risking $100 to target $100 profit, if my win to loss ratio is 50-50, I'm gonna make $100, and then I'm gonna lose $100.
Yeah.
Then I'm gonna make $100 and then lose $100. So you just have this ebb and flow of you make some money and then you give it back. So what you need is the ability to, have a risk reward of 1 to 2, so that when you have a win, you win more than you lose on your losers. And both you and I know, as a trader, you have wins and losses. If somebody's telling you that all I do is have wins, that we know they're just lying, because the natural game of trading is you have wins, you have losses, you have break-even trades. And, probably, you only have to be right 50% of the time to potentially make money. But what you do need is a good risk reward scenario in your trading. So that would be the first thing that I would look at as you're setting off with your trades, is make sure you have that risk reward, set up there. Then, of course, when we're in the trade, just the next thing I would consider is, and here we're risking potentially 20 pips or 20 points, but we call them pips, and targeting 40. So as a rule of thumb, what I like to do is, as price moves up in my favor, once I'm up 20 pips, I like to move my stop loss to my entry level, so that if price pulls back towards my entry point, I can't lose any money. I'll get taken out at my entry point. So I'm managing the risk on the trade as price moves in my favor. So at some point in the trade, you have to get the risk out, because if you don't, price can then turn around and potentially move against you and you could lose money. So once you're up what you're risking, I would say make sure you get yourself to what we call a break-even perspective, where potentially you can't lose any money on the trade if price pulls back. That's so true.
And it allows you to sleep at night a lot easier.
That's right. If you're taking a trade, say an hour before bedtime, and you can at least move your stop loss to your trade entry and get the risk out, you'll sleep better, don't you?
Yeah, and you'll still dream about it. Don't worry, that's normal.
Oh yeah, you'll probably still dream about it, but at least you're not stressing over the fact that you may be losing some money while you're sleeping. So so we always have to look at risk to reward as the first thing, and then once we're in the trade, as the trade becomes profitable, managing the potential risk on the trade and get the risk out of the trade as best we can. And then, of course, the next step is looking to exit at your target.
And things like, when I look at this right now, let's say, you saw this trade set up, you didn't take it, you get people then start to almost revenge trade, or saying, oh, I've got to make that back. So they might break their strategy rather than reset your brain and go, okay, now I need to look for the next opportunity. Okay. And whereas right now we're seeing price start to move back a little bit, and that can encourage people emotionally to do things that are outside of your strategy. So keep in mind, once you've sort of mastered the quick start, we then start to layer the next things on top of that, because you could find, oh, 3 trades work, 3 trades didn't. You know what I mean? So then we need to say, okay, well, let's look at what you need to learn to understand which of those trades mightn't you have chosen for various reasons, such as momentum, the even longer term trend, major support or resistance, things like that. And those elements are then layered on top. So you can start to become a trader who's looking at multiple reasons for entry and multiple reasons while you're managing your trade. So I've put and also thank you for that, Duncan. That was much appreciated.
No problem.
No worries. So I'll just take back the control here and then show people what we've got. So all right, so just reclaiming the host there. Thank you so much to Duncan Cooper for going through that with us. So let's take a quick look. I'll share my screen now and show you a link that I've actually put into the chat area on this Zoom meeting. So I'll just open that up for you. So in this link in our chat area, when I get to it, I'll just click on that. So that will, in effect, I hope you can all see it. This is just our ACY website. So there's literally a button here called Open an Account, free to do so. So you click on that. You need to provide some details, as we have a license for international clients. We also are ASIC licensed here in Australia under our financial regulator as well. So feel free to put your details in here. Once your identification is verified by our compliance team, you will literally receive your username and login. And from there, your account manager will email you and book in a time, folks, book in a time to get your platform set up for free by your account manager, setting up all, not just the quick start, but all the other layers as well. And that will, of course, get you access to the complete 30-part trading course, and of course, access to Duncan Cooper's webinars. And of course, we do have other analysts providing market analysis here as well. So I'd like to, if we don't have any questions now, so feel free to fire through any questions about what we've gone through this evening, and we'll be happy to answer them for you. So we do have a question that's come through regarding speaking different languages. So we do have an international desk here. So we do have account managers that speak Arabic for you, or speak other languages, including Bahasa, Vietnamese, French, German, obviously English, and they're more than happy to assist you and teach you with this setup as well. So whatever language, sometimes people aren't 100% sure, of course, Chinese, but if you're not, if you would prefer it in a different language, then your account manager will be able to assist you there as well. So feel free to request that. Any questions you do have, put them through to our ACY chat and they'll be able to assist you. But here we go. I think we've got a question coming through now. So thank you, Denise. We look forward to dealing with you. I can see, Denise, do you live in the UK? Oh, sorry, in the USA. So you're actually residing in the USA, because ACY Securities doesn't have the license to set you up in the USA, unfortunately. However, if you do reside in different countries, then more than happy to provide you that. So what I would suggest you do is attempt to get your account set up and verified, and then we can assist you from there. All right, so if there aren't any other questions, no other questions coming through that I can see about tonight, I'd like to—
I've got a question, Nathan.
Please, Duncan, give me a question.
So just for everybody that's on tonight, if you're not asking a question at the moment, they may have a question later on.
Okay.
You were saying before, how do you access the chat at ACY? Because if people don't know how to access the chat, maybe you could just show them.
Sure. When you log in to the client portal, okay, at ACY, there will be a giant chat bubble. So you just click on the chat bubble, and you can do it on our website as well. So feel free to have a look at that.
What if they're not an account holder though at the moment and they want to ask some questions?
They can still ask some questions. They can do that through that chat as well on our website. So you can come through the website.
How do you get that was my question though, but how do you get that chat? Where do you find that chat?
So when you go to acy.com, okay, have a look there. There will be a chat bubble on the main website. So you can click on that, and it's you can ask various questions, and it will come back to you automated 24/7. Sorry, 24/5. So 24 hours a day, 5 days a week. Other than that, you can always contact me on my email address. Okay, so nathan.bray@acy.com. If you have any questions at all, feel free to send that through to me. All right, that's been good. Before we head off, let's check and see how this New Zealand dollar is going. This New Zealand dollar is breaking a little bit higher right now. It's putting in that higher high.
We've got another message coming in, or a question coming in from Wei. So he's asking, like the starter kits, can I learn your teaching together doing with ACY demo account?
You can, but you need to register your live account with us. So that will get you access to everything. So you can still use your demo. You don't have to trade through your live account, but you will have to register your live account at ACY, which, folks, is free to do so. And as I mentioned, there's no obligation to do any trading or anything like that, but it does basically unlock your ability to access all the education, and you can do that in the demo accounts. Okay. However, just register that live account.
Great.
Fantastic. So I think that's pretty much all the questions that we've got coming through. And I think I'll be keeping an eye on this New Zealand dollar trade as well.
I'm just going to look at my own screen here. Yeah, it's moving up.
I know. I'm doing the same thing. That's moving up quite nicely at the moment.
New high for the day.
And one of the things too is you find that, the market is really giving us an indication. So you're not going to sit here and say to yourself, I need to be right on every trade. A lot of people are like, I need to know why it's happening. But the reality is, you've got to keep in mind that the market is just full of all these different participants for different purposes and different results. Okay, so it's not like there's like a football game where there's two clear sides, if that makes sense, even though sometimes people can think that with buying and selling. We need to keep that in mind. So the goal then is to improve your knowledge and systemize your strategy and follow it, so that you can start to see, not am I right every time, but am I profitable? Okay, folks, that would be the thing I'd really leave you with. So getting used to trading a strategy and sticking to it allows you to look back and go, is what I'm doing going to be consistent or profitable, or do I need to make adjustments to that? So the first step really is to follow a strategy. And the second part, of course, is then to start to tweak your strategy to become a little bit more complex for different movers in the market. Would you kind of agree with that, Duncan?
Absolutely. If you don't have a plan, you don't know what's working. So you need to, even if it's just a simple plan, you need to follow a simple plan so that you can say, okay, I'm doing the same thing all the time. And then I can see that, what's my result over 20 trades? If I've done the same thing over 20 trades, what's my result? If I had a random approach where I was doing a different thing on every trade, how would I know what was working or was not working? So if you've got a simple set of rules, as I was saying at the beginning, Look at the day chart trend first of all. What is that? And then look to a lower time frame to trade in line with that trend. Have a simple plan, simple mechanism to give you a trigger to take a trade, take 20 trades and then review. And then you can look to maybe add a few things in there to improve things if the things need improving. Maybe things don't need to be improved. Maybe you're seeing profitability over 20 trades, and then you can just keep carrying on in the same vein and start to see a consistent, result over many, many weeks and months.
Thank you, Duncan. All right, folks. Well, it's been a pleasure, and we look forward to working with you. Keep in mind, once you've done the 30-part beginner advanced course and gone live to see Duncan Cooper, and you've got access, say, to our Telegram alert key level service, the next step really is we do have what we call the inner circle. So the inner circle allows you to talk directly to myself and Duncan Cooper in like a trading community. And that's for people who have gone through the course, are active traders, understand technical analysis. What we do is get together with people and allow people to talk about what they're seeing in the market at the moment and what they're experiencing. So that then finishes you off on quite a high level of interaction to see what other traders are doing, what they're experiencing, and to get feedbacks from professional traders like myself and, of course, Duncan Cooper. So keep that in mind, folks. Get those accounts registered, live and active, and we'll book you in and we'll set you up. And I guess we look forward to working with you and get you started on Quick Start. All right. Thanks, Duncan.
Thanks, Nathan. Thanks, everybody.
Cheers. Thanks, everyone. Bye.